Very good evening, everyone. So let us start with the amendments which are there for May 2026 examinations. So there are very little amendments which can easily be comprehended. So if you will see that there are only in these chapters, very few amendments are there. So in the basic concepts, if I tell you, we'll be discussing each amendment in detail and if required, some examples also. But if I tell you in basic concepts, there are just two amendments. One, the slab rates has been changed. In optional regime, it is same, but in default regime, it is changed a little bit. And the rebate has been little bit changed again under default regime. So these two amendments are basically in default regime, not in optional. In residential status, there is no change. So whatever we have done earlier, it is same in residential status. So there is no change. In salary chapter, there is very, very negligible change. In fact, it will not affect much also, but it's a very negligible change. Some limits has been changed. I will be telling you that. So salary, very negligible change. In house property, again, if you say that there is no change, I can say that in house property also there is a hardly a negligible changes there. So which is not will affect that much. Otherwise, all your computation of house property will remain the same, whatever we have done earlier. For May 26th also it is same. PGBP, I would say almost no change, right? In PGBP also is a negligible change. That is also in the definition, just the definition of MSME has been prescribed now. So, which is not very important for examination earlier also. Why MSME is there? Because of section 43B, because certain payments are only allowed only on actual payment. So regarding MSME, only the definition is there now. Capital gains also there is no change except 54 EC where we used to invest in bonds. And if the assessee has sold land or building, they have transferred and they have actually invested in bonds. So up to 50 lakh. So we could invest in NHI bonds, RECL bonds. Do you remember that? Or some other prescribed bonds. So there are two more bonds which are added over now. HUDCO and IREDA, IREDA bond. So this is the only change in capital gain. So as of now, you are seeing that there is not much change. In IFRS chapter, clubbing and set off, there is no change, 0% change, right? So there is no change there. In chapter 6, say 80cc, 80C to 80U. So there is a little minor addition has been done in section 80CCD, which is of new pension scheme. So there were actually three parts of it: 80CCD1, 80CCD1B, 80CCD2. So in 80CCD1B, where there is a limit of 50,000 rupees, there is a little change has been, something has been inserted over there. So this is the one change. So basically, if I tell you now, in TDS and TCS chapter, basically in TDS chapter, there is a little more change, and that too, not that much, only the limits has been changed. Somewhere rate has been changed or somewhere the threshold limit has been changed. So yes, in TDS chapter, there is little changes in these sections. So some limits or some extra additions has been given to us. In TCS also, there is a minor changes, little change. Advanced tax, there is no change. In return of income, I would say, although there are two changes, but hardly I would say this change is not that important. Only this updated return, this is the change which I can think that yes, this is important for examination. There is a time limit of updated return has been changed. Earlier it was 24 months. Now it has been increased to 48 months. So these are the only change. So I don't think that it will take much time to revise all these things. So let us do one by one. What are the changes? So I have also floated this PDF on the WhatsApp group, and the students who would be watching on YouTube, it is available on the mobile application also. You will find the link in the description. So let us do these changes one by one. The first chapter is basic concepts. There are two amendments. So I have given all these: amendment number 1, amendment number 2. So I've just numbered them. Otherwise, there is no such number. I have just numbered them for your convenience. Right. So first change is tax rates has been changed, and only the normal tax rate, not special. Guys, special tax rates are same. So what were the special tax rates? Special tax rates, let's say for example, there is a long-term capital gain 12.5%. And if it is 112A, 12.5% in excess of 1,25,000, which was earlier also, the same is there. On casual income, 30%, on 111A, 20%. So special rates have not been changed. Only the normal rates been changed. That too under default regime, right? So under optional regime, still we have the same slab rate. What was the slab rate in optional regime? It was 0 to 2.5 lakh, nil, from 2.5 lakh to 5 lakh. Do you remember that? 5% and so on. So still optional regime is same. Optional regime, the tax rate are, everything is same. Rebate under optional regime is also same. Rebate under optional regime. What was that? In optional regime, the rebate was if the person, resident individual, if that person is earning up to 5 lakh rupees, then he or she is entitled for rebate maximum 12,500 under optional regime. Now also it is same. So only the change is default regime. In default regime, the slab rate is changed. In default regime, rebate is changed. These are the two changes in the first chapter. So what are the slab rates now? See, earlier, if you remember, the basic exemption limit under default regime was 3 lakh rupees. Do you remember that? Everybody, yes or no?
Yes, sir.
So now,
Yes, sir.
because it was little bit tricky, 0 to 3 lakh, then 3 to 7, 7 to 10, something, it was like that. Now it has become little bit convenient to learn. How? Now there is a gap of 4 lakh, 4 lakh, 4 lakh each. Now 0 to 4 lakh, the tax rate would be nil under default regime. Only under default regime, guys. Optional regime, no change. Still the basic exemption limit is 2.5 lakh under optional regime. And in optional regime, we get the benefit of the age also. If the assessee is a resident, senior citizen, 3 lakh, 5 lakh, everything is same in optional regime. Only in default regime, there is a change. So what is the basic exemption limit in default now? 4 lakh rupees, right? So 0 to 4 lakh, no tax. So if you will see that there is a gap of 4 lakh, 4 lakh, 4 lakh. So you just remember the table of 4, right? And up till 24 lakh, the tax rate is this. And more than 24 lakh, it is 30%. Earlier it was what? More than what? 15, 16 something?
15 lakhs.
15 lakh something. But now it is 24 lakh. So it is more than 24 lakh, it is 30%. So see, 0 to 4, 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24. And there is a gap of 5%. So it's very easy to remember now. So 0 to 4 lakh nil, 4 to 8, 5, 10, 15, 20, 25. And once you reach 25, you understand the next would be 30%. So 30% is the highest rate. So it's very easy to remember. So more than 24 lakh is 30%. Guys, everybody understood the first change? Correct? So you'll be able to remember. So still the other income would be taxable at the same rates only these are changed. So if you would like to, should I give you the example on this or have you understood this change? Tell me quickly. Should I give you the example of this or have you understood the change? Are say yes or no, na? I think I'm not getting your voice.
So understood, sir.
Got it now?
Yeah.
Okay. Okay, good. So in fact, I'll be taking this example with rebate. We can take one example. Now, the second change is 87A rebate. You understand 87A rebate is only available to resident individual, correct now? It is not available to any other assessee, only to resident individual. In optional regime, there is no change. So what was the rebate under optional regime? Still it's same. So if the income of the assessee is not more than 5 lakh, he was entitled to rebate under optional regime. If it is little more than 5 lakh, then under optional regime, there was no rebate. Same as here. What was the amount of rebate under optional regime? 12,500, right? And rebate is not available from 1128X. You remember 1128X is what? Long-term capital gain on what? Equity shares or equity oriented units. So on these 112A income, there is no rebate available. Earlier also it was not available. Here also in optional regime, here also there is no not available. So under optional regime, there is no change. But under default regime, there is a change. There is a change. Now it is available. Earlier it was, I believe it was till 7 lakh, right? So till 7 lakh, there would be a rebate. After that, there would be no rebate. But now this has been extended up till 12 lakh. Now, any resident individual who is earning up to 12 lakh rupees, so that person is entitled to rebate. So this earlier it was 7 lakh, now it is 12 lakh. Why I'm telling you earlier one, so that you can connect it, right? Otherwise, you have to forget that earlier one now. So up till 12 lakh, you are entitled to rebate. And how much is the rebate? Tax on your income, or earlier it was, I believe, 25,000, right? So now it is 60,000 rupees. Tax on income or 60,000, whichever is lower, you will get this rebate. So two things you should remember: that person who is having an income up till 12 lakh, and 60,000 is the maximum rebate amount. It is now available. So earlier limit has been changed to 60,000 now. The another change which is important now, because earlier the rebate was not available only from 112A tax, because earlier the rebate was available from other special income. But now there is a little change that under default regime, the rebate is not available from any of the special income. Understood? So if you have 111A, if you have 112, if you have 112A, see 112A was earlier also, but now some other special income is also there. So all other special income, if you have casual income, so what is 111A? Short term capital gain on equity shares or equity oriented units. 112A is long term capital gain, and casual income, you understand, these all are special income. Now rebate would not be available from all these special income also under the default regime. But under optional regime, only 112A, it is not available. It can still be available from 111A. It can be still be available from 112 or casual income, but not from 112A. So earlier the both, it was same. 112A was not there, 112A was not there, but now they have also excluded other special income also, right? So rebate would not be available there. So let us do this example with the help of this example, so that we can actually also practice this slab rates as well as the rebate thing. So let us write an example with me. Example. Compute the tax liability of Mr. A for previous year 25-26, right? Now the previous year is 25-26, that is assessment year 26-27. So we need to compute the tax liability of A. Let's say his salary income is 5 lakh. His PGBP income is 1 lakh. His long-term capital gain is 4 lakh.
Sir,
Yes, please.
sir, the screen is blurred, sir, lately.
Is it?
Yes, sir.
Just give me a moment.
Yes, sir.
Okay. So this is LTCG is 4 lakh, and let's say strip 112A is rupees 2 lakh. How much it is? 5 plus 1, 6 plus 4. And we have casual income rupees 2 lakh. This is total 12 lakh. The assessee has total income of 12 lakh, and now we need to compute his tax liability. Now we understand that whenever the assessee has total income, if there is any special income, we have to tax it accordingly. So he has tax on above. Does it has any special income? Do you remember that first we have to see that whether it has any 111A? So he does not have any short-term capital gain. There is no 111A also. So does it has any 112? So on 112, we understand that long-term capital gain is divided into two parts. One is 112, which is other long-term, and 112A, which is on equity shares or equity-oriented unit. So it is tax on above on long-term capital gain 112. You understand it is at a rate of 12.5%. On 112A at a rate of 12.5%, in excess of, how much in excess of? 1,25,000, same thing. And on casual income, the rate is 30%. And on remaining income, Now, this person has 112, how much? See, if long-term capital gain is 4 lakh, 112 is 2 lakh. So the remaining is all 112 other long-term. So how much it is? 2 lakh. So 112 is remaining 2 lakh. So what you can do is, just to understand it more better, you can make 112 a 3 lakh. Just make 3 lakh. So this would be 112 will become 1 lakh rupees at a rate of 12.5%. 3 lakh minus 125 into 12.5%. Everybody is understanding it? Same thing. How much is the casual income? 3 lakh, 2 lakh rupees. 2 lakh into 30%. And how much is the remaining income? Out of 12, subtract 1, subtract 3, subtract 2. So 1 plus 3, 4 plus 6, it is 6 lakh rupees. So remaining income is 6 lakh rupees, right? Now we have to compute the taxes. See, 1 lakh into 12.5% is 12,500. 112A is 12.5% in excess of 125. So 3 lakh minus 125 will become how much? 3 lakh minus 1,25,000 into 12.5%. It will become 21,875. Understood? Casual income 30%. 2 lakh into 30% is how much? 60,000. And on 6 lakh, calculate the slab rate. So we understand 0 to 4 lakh it is 0 to 4 lakh it is nil, and 4 to 8 we are not going till 8, we are going 4 to 6. So next 2 lakh it is 5%. So 2 lakh into 5% is 10,000 rupees. So this is 10,000 rupees. So now we have 12,500, 21,875 plus 60,000 plus 10,000. How much it is? 12,500 plus 21,875 plus 60,000 plus 10,000. So this is it 1,04,375, guys? Is it 104,375? Am I correct?
Yes.
Okay. Now we will be giving the rebate. Less rebate under section 87A. Since his income is not more than 12 lakh rupees, so he is entitled for rebate. Now, under default regime, the rebate is available only from your normal income. It is not available from your special income. Earlier, it was available from 112 also, or from 111A also, other special income also, but not from 112A. But now, none of the special income is entitled for rebate. So we cannot give rebate from this also, from this also, from this also. Now the rebate is only from this 10,000. So less rebate under section 87A would be A. Text on above, excluding special tax. Excluding special tax. So if I exclude everything, so it will be 10,000 rupees, or B, 60,000 rupees is the fixed limit. Whichever is lower, so how much it would be? 10,000. So here the rebate would be 10,000 only. So this is 94,375 would be the taxes after rebate, and now we will add 4% health and education cess into 4%. So this is 3,775, make it total 98,150. This is the tax liability. Understood the rebate thing also?
Yes.
So
So only the change is that earlier the rebate under default regime, that if you have income up till 7 lakh, but now it is 12 lakh. Earlier it was maximum 25,000. Now it is maximum 60,000. Earlier it was from all the special income also it was available except 112A, but now under default regime, none of the special income is covered by rebate, right? So this is important thing. So this is the important change which is there, which can be asked in the examination because this is an amendment. And whether, see, in default regime, still the same thing would be there, because under optional regime versus default regime, if you will see, under optional regime, the person who has income up till 5 lakh, only that person was eligible. Still it is same. Under default regime, a person who has income up till 12 lakh, that person is eligible. Do you understand that concept of marginal rebate also? If you have income little bit over and above, under optional regime, it is not available. So let's say if somebody has income of 5 lakh 10,000 rupees, little bit it is going more than 5 lakh. So under optional regime, it was not there. If you go even 1 rupee up by 5 lakh, it was not available. But here under default regime, it was available there. Then also prior to amendment, now also. So let's say if somebody is earning income of 12 lakh 20,000. So will he be eligible for rebate under default regime? The answer is yes. The same concept is there of marginal rebate also. Do you want me to give this example or you understood this? If you want, I can give this example also if you want, or we can proceed. Tell me.
Sir,
Example. Okay. See, the example would remain almost the same calculation, but let us take this example. Compute tax liability of Mr. Z. His total income is rupees 12,000. Sorry, 12 lakh. Let's say 30,000. His total income is 1230. Little bit going over and above 1230, and he is following 115 BAC, right? Default regime. Default regime. So now the total income is, guys, screen is visible?
Yes, sir.
Total income is 12 lakh 30,000. Now tax on above. Tax on above is, you understand, 12 lakh 30,000. Please apply the new slab rate. So as of now, if nothing is mentioned about the special income, I'll assume that it is normal income, same thing. So first 4 lakh is how much? You can do it in rough. First 4 lakh nil. Next 4 lakh 5%. Next 4 lakh 10%. See, 4 plus 4 plus 4, 12 lakh gone. So remaining 30,000 is how much? 15%. Guys, are you able to see it? Just the difference of 5% is there. 5, 10, 15. So it is nil. 4 lakh into 5% is 20,000. 4 lakh into 10% is 40,000. 30,000 into 15% is how much? 4,500. Guys, are you able to get 64,500? My calculation is correct. 64,500. Correct?
Yes, sir.
Okay, tax on above. Now, less rebate, if any. Rebate under section 87A, if any. This is tax on above. This is A. Let us call it A. You understand now? Whenever our income goes above 12 lakh or above that exemption amount of rebate, then the calculation of rebate is little different. We have to see A, B, whether A is greater than B or not. So these are the taxes. So let's rebate of 87A, if any. So tax on 12 lakh plus additional income. So earlier we used to do tax on 7 lakh plus additional income. So now we are going tax on 12 lakh plus additional income. So what is the tax on 12 lakh? So you understand, tax on 12 lakh is how much? 4 lakh, 4 lakh, 4 lakh. 0, 5%, 10%. 4 lakh into 5% is how much? 20. 4 lakh into 10% is how much? 40. So how much is the tax on 12 lakh? 60,000. And a person who is earning 12 lakh rupees, he has to pay 60,000 and he will get the rebate also of 60. So please tell me, on 12 lakh, generally, if a person is earning normal income, so on 12 lakh, generally, how much is the tax? Zero. Everybody is okay with it? So Manu, you are okay with it?
Yes.
Because of rebate. Now, because of rebate, his tax would be zero. So tax on 12 lakh is zero. Plus additional income is how much? 30,000. So this is B. 0 plus 30,000, 30,000. Okay, same calculation which we have done earlier. This is B. And if, see, my taxes are going 64,500, but my income is increasing by 30,000 only. So my taxes are going so up, but my income is going only 30. So you understand, if A is greater than B, your taxes are more than your extra income, then rebate is equal to, so make sure you are getting it. Rebate is equal to A minus B. This is what we used to do.
Sure.
So A is 64,500, B is 30,000. So how much would be the rebate? 34,500. So this is 64 minus this. It is 30,000 is the taxes. Now plus 4% health and education cess. This is 1,200, 31,200. So this is the tax liability. So I have written it in your notes that marginal rebate is also available under default regime. Right? Marginal rebate is also available in default regime. Initially also it was available. Now also it is available. But under optional regime, that marginal rebate concept is not there. Done? Let me know once done. Done, everyone. Bala, Smriti, Manu, Pavitra, Inu.
Done, sir.
Okay.
Done, sir.
Very good. So these are the two changes in the first chapter. So first was the slab rates under default. The second is the 87A rebate. Okay. Chapter number 2, residential status, no change. Everything is same. The basic conditions, 182 days, 60 plus 365 days in the last 4 years. And if the person is actually having the Indian source income more than 15 lakh, everything would be same. There is no change in residential status. Income under the head salary, we can say that almost there is no change. Almost there is no change. Only two things are actually little bit changed, which were not actually important earlier also. Now also, I don't think it's that important, but since the amendment is actually a little bit, we give more priority to amendment. So that is the reason I'm taking. Otherwise, there is a hardly change in salary. Guys, if you remember, because this was a very small thing, so I can expect you that you might not remember this also. So there was a concept of specified employee in the chapter of salary. Why? Because actually there are 5 perquisites. See, salary chapter, if you remember, salary chapter consists of section 15, 16 and 17, right? This you all must be knowing. 15, 16 and 17. 17 is perquisite. Section 17, subsection 2, you don't have to remember this. Not important to remember the section number, but 17.2 is perquisite. Under 17.2, there are few perquisites which are only taxable for specified employee. If you are a specified employee, then only they are taxable. Otherwise, they were not taxable. So there were actually 17 to 3. There was a section, no need to remember the guys, but 17 to 3, there were some 5 perquisites which are taxable only for the specified employee. So if you are a specified employee, then it is taxable. If you are a non-specified employee, then it is exempt. These perquisites are exempt. What were those perquisites? Motor car facility. These are all covered under 17 to 3. I have mentioned it over there. These are all covered under 17 to 3. There are 5 perquisites. One is motor car facility. So if you are a specific, and generally I used to say generally that all employees are specified employees only, because there was a very small threshold limit of 50,000, that if somebody has a salary income in the entire year 50,000, so everybody can have a salary income of 50,000, but 50,000 is a very small amount which they have given to us. Now they have increased that amount. So the only change is in the definition of specified employee. But let me give the background first. So there was a section 17 to 3 where 5 perquisites were there. Those perquisites were motor car facility, education facility, gas, electricity and water bill, servant facilities, or free or concessional tickets for transport employees. There is no change, guys, there, but I have just given to you as a reference, right? So there is no change there. Whatever is the motor car facility you have done earlier, it is same. Whatever the education facility you have done earlier, it is same. There is no change in the calculation of perquisite. But yes, these 5 perquisites are taxable only for specified employee, right? If the person is not a specified employee, so these perquisites were exempt. Now there is a little change in specified employee. Now what was the definition of the specified employee? Actually, there were 3 points. If you are a director of the company also and you're the employee also, then you are a specified employee. That point still is same. Only one point is changed. Second is, if you are actually the substantial owner in the company, you have the voting rights of 20% or more in the company, then you become a specified employee. And third is, if your actually salary income is up to 50,000 rupees, which has been changed to, only one change is there. If your monetary income is 4 lakh rupees now, is up to 4 lakh rupees, then also you are if it is exceeding 4 lakh rupees, then only you are a specified employee. Earlier, this limit was 50,000. So 50,000 was a very small limit. It was actually changed in, you don't have to remember it, but it was changed in 2001. After 2001, it's been how many years? 26 years. It has not yet increased. So what government has done is that they have increased that limit. So who is a specified employee? There were 3 points. If any of the point is satisfied, you become the specified employee. Only this point has been changed. These 2 points are still unchanged. So the definition of specified employee means any director of the company is a specified employee. It was there earlier also, now also it is same. If you are an employee who has substantial interest, 20% or more ownership in the company, then also earlier it was same, here now there is same. Only the change is that if an employee whose monetary income under the head salary exceeds, earlier it was 50,000, now it is 4 lakh. This is the only change. So hardly any change. Got it? So this is just a theoretical change. Second is also almost a theoretical change. So the second point, the second amendment is, if there is a medical treatment outside India. So if you remember, whenever there is a perquisite that your employee is giving to the assessee, the facility of medical treatment outside India of the employee himself or his family member, so it used to be exempt. Actually, there were 3 types of expenses were there. First is the treatment expenses outside India. Second is the stay expenses. And whenever the patient, if you remember, I used to tell you that whenever the patient would be going over there, so he would be accompanied by one attendant also. So stay expenses, and stay, who would actually stay there? Patient will also stay, or one of the attendant also can stay. So +1. And the traveling expenses also. So there were 3 types of expenses which were there whenever the person is treated outside India. So treatment expenses, there is actually change in only this traveling one. So the thing is that I am giving you the background. Earlier, what was used to happen is, if let's say there is a treatment expenses, they were exempt up to the RBI limit. Still it is same. Stay expenses are exempt up to the RBI limit, still it is same. The traveling expenses, it was mentioned there that the traveling expenses would be taxable or they would be exempt. It depends on your GTI. So earlier it was, if the person's GTI is more than 2 lakh, then it used to be exempt, right? Now they have actually increased this limit to 8 lakh. Now, if the GTI of the person is more than 8 lakh, then it would be taxable. But up till 8 lakh, the traveling expenses will also be exempt. So they have changed the limit of 2 lakh, they have increased to 8 lakh. So this is the change only in traveling expenses. If GTI is up to 8 lakh, then exempt. If it is more than 8 lakh, then it should be taxable, traveling expenses. So I've given the background. So medical treatment outside India, treatment expenses were exempt as per RBI limit earlier also, now also same. Stay expenses plus one attendant, exempt up to RBI limit, same. Traveling expenses, earlier GTI were more than 2 lakh, taxable. Now it is more than 8 lakh, then it will be taxable. So this limit has been changed. Guys, these are the two changes which is there in the chapter of salary. Otherwise, not a very big major changes in any computation. Nothing has been changed. Got it about salary? So basically, these are
So,
two theoretical changes, I can say.
Yes, sir.
House property, again, I can say that there is actually almost no change. In house property also, there is no change. Only the change is, see, for self-occupied property, we can take two properties, the value is nil, still it is same. And for unoccupied property, if the property was unoccupied, so what they have done is, initially they have mentioned if the property is not occupied. Not occupied, why? Because it is not let out also and you are also not living. But it was for the reason that actually you are doing a job somewhere. You are doing a job. So they have given a reason previously that if it was unoccupied by the reason, if you are working in some other city, you are working in some other city, you are having a job there, you are having a business there, then only it could be taken as nil. But they have actually deleted that parameter. So if they said, they are now saying that if the property is unoccupied for any reason, whether you are having a job outside, not outside, doesn't matter. Now what they have done is a good thing. They have done that if the property is not let out nor self-occupied, it is totally unoccupied, you can take the value as nil. Now there is no such reason. Earlier they have given that if it is unoccupied due to this reason that you are living outside, but now they have deleted that reason also. They are saying that for any reason you are outside, and if it is for any reason the property is unoccupied, the value shall be taken as nil. Got it? So this is the only change. Otherwise, in computation, guys, there is no change. There is no change. So there is again a very, very theoretical change in house property. Got it? Same in PGBP. In computation, no changes there. Again, I would say a theoretical change. Theoretical change. What they have done is in 43B, you remember this section 43B? There were 7 types of expenses which are allowed only on actual payment. So what they
yes,
have
sir.
done is, and the last one was MSME, that whenever you pay to MSME, do you remember that? That if there is a written agreement, so you have to pay as per the agreement or maximum 45 days. And if there is no written agreement, then 15 days you have to pay. Otherwise, it will not be allowed on due basis. It will be allowed on actual payment basis. Everything is same, guys. Everything is same. Nothing has been changed. Only the thing is that now they have given the definition of small and medium enterprises. So micro and small enterprises, they have given the definition. So now they are saying, what is a micro enterprise? What is a small enterprise? So micro enterprise is an enterprise who has made an investment, whose turnover is up to 10 crores. Micro enterprise means a very small enterprise. What does it mean? So as per MSME Act, it means that whose turnover is up till 10 crores in the year, and they have made an investment in plant and machinery up to 2.5 crore only. So that enterprise is called micro enterprise. Theoretical change. What is a small enterprise? Just multiplied by 10. Just multiplied by 10. If your turnover is up to 100 crore, you are a small enterprise. And your investment in plant and machinery is up till 25 crore, then it is actually a small enterprise. So they have given the definition of micro and small enterprises, which is again a theoretical change. Now, if you will actually, now MSME stands for micro, small and medium enterprises. Guys, Now only micro and small enterprises covered by 43B. Micro and small enterprises only covered by 43B. If it is a medium enterprises, if it is medium enterprise, right? See, only micro is there and small is there. Medium is not there. So what does it mean? That if there is a medium enterprise, it is not covered by 43B. What does it mean? That if you have to make the payment to a medium enterprises, whether you have made the payment, whether you have not made the payment, it is allowed on due basis. Understood? So only micro enterprise when you are supposed to make the payment, small enterprise you are supposed to make the payment, then it is allowed on actual payment only. Otherwise, if you have not made the payment within time, it will not be allowed. It will be allowed on actual payment only. But medium enterprises, whether you make the payment to them or not made, or you don't make the payment to them, it is allowed on due basis. It is not subject to 43. Got it? So this is the amendment in PGBP. Everybody understood? So it's a
Yes, sir.
it's a theoretical amendment, nothing to do with the practical thing, nothing to do with the computation. It is just a theoretical amendment, just the definition of MSME. Okay, capital gain. Again, almost no change, but it is little bit important. In fact, it was applicable for January 26 also, but I have just taken it here because this actually came in between. So earlier in 54 EC, investment in bonds, assessee is selling their land or building and they are investing in bonds. How many months they have to invest in? Within 6 months, right? Within 6 months you have to invest in. Maximum 50 lakh rupees is the deduction, is the exemption available in 54 EC. So earlier it was NHAI bonds, RECL bonds. These are the two bonds which are most common, right? And NHAI and RECL bonds. And there were any other notified bonds, government bonds also was there, any other notified bonds. But you just have to learn other notified bonds. So which were they? Which were notified earlier also? Bonds of Power Finance Corporation, Indian Railway Finance Corporation. So these were earlier also. These were other notified bonds. But generally, students remember only these two, NHI and RECL, which was good enough. Now they have actually added two more bonds. Now, if you no need to remember the dates, guys. Dates are not very important to remember here, but still I have mentioned the date. That if you mention on or after these dates, then 54 EC is available over here. So let's say today, if you don't invest in NHI, but you invest in HUDCO bonds. What is HUDCO? Housing and Urban Development Corporation Limited. It is also an allowable investment under 54 EC. Or you invest in IREDA, IREDA, which is Indian Renewable Energy Development Agency. If you invest in their bonds also, now 54 EC is available. So now the scope has actually increased, that now you can invest in these two bonds also by HUDCO and IREDA. So this is the change in 54 EC. Got it? So two more assets now where we can invest. Apart from NHI, RECL or other prescribed bonds, two more assets. This is capital gain change. So I don't think that it requires any example. So this is a simple thing. Now, IFOS, no change. Clubbing, no change. Set off and carry forward, no change. Everything which we have done earlier, it is same for now also. Chapter 6A, deductions. 80C to 80U chapter, there is only one change. There is only one change. See, if you remember, there was section 80CCD, which was new pension scheme. Right? And there was actually 80CCD, if you remember. So I have actually divided this into three parts: 80CCD1, 80CCD1B, and 80CCD2. Actually, 80CCD2 was employer contribution to pension scheme. So this was employer contribution to pension scheme. Employer contribution to pension scheme. And this was allowed under both the regimes. If you remember, it was allowed in optional also. It was, see, in optional though, all three are allowed. But in default, only this was allowed. It is still the same, guys, no change. What is 80CCD1 and 80CCD1B? It was assessee's contribution to new pension scheme. It was assessee's contribution. So assessee can contribute here, but let's say because there is a maximum limit of 1,50,000 also it was there. So let's say assessee has contributed more. So if you remember in 80CCD1B, there is an additional limit of 50,000. Are you able to recall that? So there was a additional limit of 50,000. Guys, still it is there. So actually there is a little change in this. Actually there is a little change in 80CCD1B. So this is the only thing which is getting changed. And that too only for optional regime, because these two are available. Actually these three, all three are available under optional regime, but under default regime, these two were not available. Are you able to recall this? Now, 80CCD1B, we can actually claim a deduction if we have invested in the new pension scheme. The assessee for himself, he has invested it. Now, what they are saying is, in CCD1B, still the limit is 50,000. They have not increased the limit. Still maximum you can claim is 50,000. But now the assessee can also invest for their minor children. They can actually invest in the name of their minor child also. Actually, Mr. Modi came out with a scheme, new pension scheme for a NPS Vatsalya. Vatsalya. Vatsalya means child. Vats means child. So they have actually introduced one more NPS scheme, new pension scheme for NPS Vatsalya. Vatsalya means for a Indian minor children. He should be an Indian citizen. He should be an Indian citizen who is a minor child who is up to 18 years of age. So today we can open a NPS Vatsalya also. Who can open? The parent can open it, or any guardian can also open it. And when, let's say there is a parent, Mr. A, he has invested, let's say he would like to take a deduction, and he has invested it for their minor child in NPS Vatsalya, any amount, they can claim a deduction in 80CCD1B today. So this is the one thing which is added now. So now you can also invest for yourself also, as well as for the minor child also. But yes, maximum reduction you will get in total in 80CCDB 50,000 only. So now they are saying that in 80CCD1B, still the limit is 50,000, guys. 50,000 limit has not been changed. So maximum you can claim 50,000 only. Now assessee being the parent, now the parent of the minor child or any guardian of the minor child, any legal guardian of the minor child, can deposit the amount in NPS Vatsalya. What is NPS Vatsalya? It's a scheme designed for minor Indian citizens who are up to the age of 18 years of age. Now today you just have to remember that how you will get in your examination, that the assessee has deposited this in NPS Vatsalya, right, in for the minor child. Now see, if it is default regime, so obviously it is not available there. So for default regime, this section is not there. So even if the assessee has invested for NPS Vatsalya, he will not get deduction. But if it is that person is actually, you are calculating for optional regime, then that person is able to get this deduction in 80CCD1B, but maximum 50,000. So for children, 50,000 extra, for himself 50,000. No. 80CCD1B is the total limit 50,000. That limit is not increased. Only the investment is increased. That is, now you can invest for your child also. Correct. So this is the change in 80CCD1B. And what is the taxability on withdrawal? So if you withdraw this money, see, if you are closing this account, if you are closing this account, the assessee is actually closing the account. So whatever the money the assessee is getting, 60% of it would be exempt. Earlier also it was 60%. If you remember in your handwritten book, you will find that if the assessee is withdrawing from the they are closing the account and they are withdrawing it, so 60% was exempt. So here also it is 60% would be exempt if you are closing the account. But if the assessee is closing the account, the reason was the minor child was expired now. He died. So the minor child is died, then it would be fully exempt. So this is the change which was brought in the taxability. And if the assessee is doing a partial withdrawal, so partial withdrawal 25% would be exempt. So whenever he is doing a complete withdrawal, 60% exempt, partial withdrawal 25% exempt. So if you remember, guys, this you can write it in your. Do you have your book right now? No. So you can note it down. Mhm. See, it was on page number 10.6 of your book. It was on 10.6 of your book. So taxability on withdrawal of NPS. So it was there that if the amount is withdrawn by the assessee, withdrawal on closure of opting out. So if you are withdrawing it completely, you are actually closing it completely. So 60% was exempt. Today also it is 60% were exempt. So if we are closing the NPS Vatsalya account totally, so whatever the amount which you will receive, 60% would be exempt, 40% would be taxable. It is same. But yes, if the minor child is expired and then the parent is withdrawing the amount, then it will be 100% exempt. But if you are doing partial withdrawal, then 25% would be exempt and taxable would be 75%. It is for Vatsalya scheme also. So this is same. So this is actually the changes in the, sorry, this is the change in the 80 CCD chapter, 80C to 80U. Got it? Now let us come to the TDS chapter. There are some little bit more changes are there, but not major. But yes, there are some threshold limit has been changed. The threshold limit has been changed. So if you will see, so I have actually given the earlier limits also just for your reference so that you can actually relate with it. Otherwise, guys, you don't have to remember this column now, but just for your reference so that you can relate with it. So these three sections, 193, 194, let us talk about these two sections. 193 is interest on securities. So interest on securities, earlier, the threshold limit was 5,000. So if you will see in your the earlier book, you will find that it was written 5,000 over there, that if it is more than 5,000, then TDS would be applicable. But now this threshold limit has been increased to 10,000. So whenever we are getting interest on securities, let's say debentures, interest, etc., so 10,000 is the limit now. So this limit has been increased in 193. TDS on dividend. Again, earlier it was 5,000. Now it has increased to 10,000. So in 193, 194, they have increased the limit. They have doubled the limit now. So up till 10,000, there would be no TDS. More than 10,000, there will be a TDS. Guys, very, very similar section like 194. We have, this is TDS on shares, on dividend on shares. The same section, the similar section was 194K. It was, if you remember, it was not a very famous section, not a very frequently repeated section, but it was tax on TDS on mutual fund income. So I used to tell you in their class that mutual fund is also are very, very similar to shares. So the income which we get on shares, we call it dividend. The income which we get in mutual fund, that we call income from mutual fund. And some people also call it dividend from mutual fund. Although dividend is not a correct word, but some people call it. But we have a very, very similar section like 194. We have 194K. So that also limit, because earlier 194 limit was 5,000. Now it is 10,000. So simultaneously, they have increased the 194K limit also, mutual fund income. So earlier it was 5,000, now it is 10,000. So I've given it somewhere, this 194K. TDS on mutual fund income. Earlier the limit was 5,000. Now they have actually made it 10,000, same like dividend income. Understood? So there is only threshold limit change. Guys, LA is quite an important section. Also, it's a very easy section, but it was quite important section. Whenever there is a compulsory acquisition of immovable property. So earlier the limit was 2.5 lakh. Now they have doubled the limit also over here, 5 lakh. So this is important for May 2026 examination, because LA is something, although it's a very small section, but this is one of the examiner's favorite section. They keep on asking about it. Now, since there is an amendment, they can actually ask it. So earlier the limit was up till 2.5 lakh. There was no TDS. More than 2.5 lakh, there was used to be TDS of 10%. Now the percentage is same. The TDS rate is same. Only the threshold limit has been increased to 5 lakh rupees. Okay. Now 194 IA. This can come in May 26. This is important change, because although the limit is changed, but 194 A TDS other than securities. Let's say you are getting bank interest. So whenever the person is used to get bank interest, cooperative bank interest, post office interest, so there was a limit of, if you remember, 40,000 rupees. And if this person is a senior citizen, 50,000 rupees. That limit has been changed. So now, earlier it was 40 and 50. Now they have changed it to 50,000 and 1 lakh. Now, whenever we will get bank interest, now the limit bank interest, cooperative bank, post office interest, the limit is 50,000 now. And for senior citizen, they have increased to 1 lakh. So earlier it was 40-50, now it is 50,000 and 1 lakh. And for other interest, because this is other than securities, let's say you have, for example, you have given a loan to a partnership firm, and partnership firm is paying you interest. So earlier the limit was 5,000. Same like this. Earlier the limit was 5,000, it has increased to 10,000. The same, any other interest, earlier the limit was 5, now they have increased to 10,000. Guys, are you all these clear with these 3 and those 2 sections? Everybody? Only the limits are getting changed, nothing else.
Yes, sir.
So no other change as such, only the limits got changed. So all these interest, etc., the limit from 5,000, which was 5,000, it has been 10,000 now. And 194 IA, bank interest, cooperative bank, post office, 40-50 has been changed to 50 and 1 lakh. And there, LA 2.5 to 5 lakh. 194K, TDS on mutual fund, 5,000 to 10,000. Then 194B and double B, that casual income section. What was the rate? 30%. Still it is 30% only. 194 double B, winning from horse races. 30%, still the rate is 30%. The threshold limit was 10,000, right? Earlier the threshold limit was 10,000, but now also the threshold limit is 10,000. But actually the calculation is little bit changed. Earlier it was whenever you are getting winning casual income. So earlier it was not practically it was an inconvenient section. Why? Because they were saying that in a year aggregate, if it is more than 10,000 in a year, because the earlier limit was aggregate 10,000. So if you are earning more than 10,000 in aggregate in a year, then TDS would be applicable. Now they have said not on aggregate, guys, on every transaction. Let's say, for example, if a person has when lottery 1, lottery 2, lottery 3, right? And now what they have done is single transaction. If a single transaction is more than 10,000, so lottery 1 he wins 1 lakh rupees, lottery 2 he wins 12,000 rupees, and lottery 3 he wins, let's say, 6,000 rupees. Now, since lottery 1 income, now we will see single transaction. Each transaction we will see. Now, lottery 1, it is more than 10,000. Yes, TDS will be there. Lottery number 2, it is more than 10,000. Let's say 12,000. TDS will be there. Lottery number 3, it is for a single transaction. Now it is 10,000. So lottery number 3, if a person will win, now there would be no TDS. Earlier, what it was? If the aggregate was more than 10,000, now we will not see the aggregate, we will see the single transaction. So this is the change in 194B and double B. What is B? Your normal casual incomes winning other than on online games, other winnings. And 194 double B specific to horse race winning. So now earlier the aggregate was 10,000. Now it is single transaction, which is 10,000. All the amendments I have marked in green. 194D, 194G, 194H, all were there. All these sections related to commission. All these sections were related to commissions. 194D is insurance commission. 194G is lottery commission. 194H is other commission and brokerage. Right. Now what they have done is they have streamlined all commission. The TDS rate would be 2% for each and every section. 194D 2%, 194G 2%, 194H 2%. Threshold limit, earlier it was 15-15. Now they have made 20-20-20 for everything. So now it is actually a better rate now. So the TDS rate for insurance commission is 2%. Lottery commission is 2%. 194H is 2%. Threshold limit would be 20-20-20 in each case. Only there is one change. There is no change actually. It is same in 194D insurance commission. So let's say the insurance company is giving the commission to the insurance agent. So the rate of TDS is 2%. But if that agent is a company, so if you remember, I have given the example of Policy Bazaar. So Policy Bazaar is what? Policy Bazaar is an insurance agent and their company also. The TDS in that case would be 10%. Earlier it was 10%. Now also it is 10%. So in 194D, there is 2 rate. Earlier it was 5 and 10, but now it is 2 and 10. So 10 is same, only that 5 is reduced to 2%. Threshold is same in all the commissions. Got it? So this is the change in rate. 194I, TDS on rent. Earlier the limit was 2.4 lakh if it is more than 2.54 lakh aggregate in a year. Now what they have done is they have made very similar to 194 IB. What is 194 IB? What 194 IB is also TDS on rent, but it is applicable on those individual ratios who are not able to deduct the TDS in 194I. So they have made same. Both the TDS rent section they have made little bit same in terms of threshold limit. So in 194 IB, the threshold limit was if the monthly rent or part of the month rent is more than 50,000. They have made it same in 194 I also. So 194 I also. Now, if the per month rent, we will not see the yearly rent now. If the per month rent or part of the month rent which you are paying, if it is exceeding 50,000 rupees, then also TDS would be applicable. So they have changed the rate also, which they have made it similar like other rent provision which was in 194 IB. 194J. 194J is quite an important section always. It's an evergreen section. If you are paying technical fees, if you are paying professional fees, if you are paying royalty, if you are paying non-competing fees, if you are paying director fees. See, for director remuneration, director fees, there is no threshold limit. Today also there is no threshold limit. Earlier also there was no threshold limit. But for other technical services, the threshold limit was 30,000 earlier. And for each we have to see separately. For professional fees, it is 30,000. For royalty, it is 30,000. For non-competing, it is 30,000. They have increased that limit to 50,000 now. So earlier it was 30, and now the threshold limit is for professional 50, for technical 50, for royalty 50, for everything it is 50. But yes, today also director fees or director remuneration, there is no threshold limit. Earlier also it was like this. Now also it is like this. So only that 30 has been changed to 50. 194K we have done, 194LA we have done. Okay, these are the changes in the TDS chapter. So you will see that mostly the threshold limits has been changed. One more section which was not there earlier, which now it is there of TDS, 194T. Now, whenever a partnership firm, it is a very easy section. Whenever a partnership firm is paying remuneration, what type of remuneration? Any salary to partner, any bonus to partner, any commission to partner, right? Any type of remuneration if we are paying any interest to partner. So whenever a partnership firm is giving remuneration to partner, they will deduct TDS at a rate of 10%. So this is 194T. TDS deductor would be the partnership firm. TDS deductor is the partner is receiving. The TDS rate is 10% and the threshold limit is 20,000. So if we are paying more than 20,000 to any partner, we will deduct TDS at a rate of 10% at the time of payment or credit, whichever is earlier. So this is the section which has been introduced, which is a very easy section. But yes, this is important. It becomes important because now earlier it was not there, but now it is introduced. Correct? So firm whenever they are paying remuneration. Now TCS chapter. Also there is a minor change in TCS chapter, but again important changes. All the changes which is there in TCS, apart from this amendment, this is not that important. But amendment number 12 and 13 is important. It can come in examination. So the first section of TCS, TCS where certain goods are taxable. So alcoholic liquor, TCS rate is 1%. Still it is same. Tandoori is 5%. Still it is same. Scrap 1%. Minerals 1%. Still it is same. Only the change is timber or any other forest produce. Earlier the rate is 2.5%. Now the rate is 2%. They have reduced little bit from 2.5. They have came to 2%. So this is the minor change over here, which is not very important. But still, yes, it could be. There is an important change over here. You remember there is a TCS section where if you are purchasing a car more than 10 lakh rupees, the TCS would be collected at 1%. Do you remember that? Are you able to recall that section? Whenever you are purchasing a car of more than 10 lakh rupees, 1% TCS was there. Still the section is same. But they have added now more items to it. Now a person is purchasing a car, or if he is purchasing some other luxurious goods also. So not only motor vehicles. Now if a person is purchasing, there is a list now. Now if you are purchasing this and the value of these luxurious goods is more than 10 lakh rupees, then the TCS will be collected at 1%. So the section is same. There is no change in the section. Only the list has been increased now. So this section was just for motor vehicles, but now it is for other notified goods also. So if you are purchasing a watch which is more than 10 lakh rupees, so we would like to collect the TCS 1%. So now wristwatch, you are purchasing any antique sculptures, paintings, etc., which is more than 10 lakh. So basically, on luxurious goods, they are actually collecting the TCS 1%. So art piece like antiques, etc., collectibles such as coin on a stamp you are purchasing, yacht, rowing boats, canoe, helicopter you are purchasing, which is more than 10 lakh, obviously. Pair of sunglasses, you are purchasing such an expensive sunglasses, which is more than 10 lakh rupees. Pair of sunglasses, you are purchasing handbag, purse, any bag, because now these bags are also, some people, celebrities purchase some 12 lakh rupees of bag, 13 lakh rupees of bag, they have to pay TCS. Pair of shoes, sportswear and equipment such as golf kit, skywear. Golf kit is quite expensive. So if it is more than 10 lakh rupees you are purchasing golf kit or any skywear, then you have to actually pay 1% TCS. The seller will collect 1% TCS. Home theater system more than 10 lakh. You are purchasing a horse. For what purpose? For horse racing purpose in a race club, or for playing polo, you are purchasing a horse which is more than 10 lakh. You have to pay TCS also. So a person selling these items has to collect TCS also. Earlier it was just on motor vehicles, but now there is a list to it. So you just have to just read this list once or twice. That's it in this section. Now there is another an important amendment here. This is also a little important. So do you remember that there was a section of a TCS for overseas tour package? So if you are traveling outside, so up till 7 lakh, there was a TCS rate. More than 7 lakh, there is a TCS rate. So that threshold limit has been changed. So from 7 lakh, they have made it to 10 lakh. So if we are traveling abroad, earlier it was 7 lakh, but now they have made it up to 10 lakh. Up till 10 lakh, the TCS rate is 5%. In excess of 10 lakh, it is 20%. So let's say if we are traveling abroad, and let's say we have purchased a tour package of 12 lakh. So first 10 lakh, the TCS would be 5%, and in excess of 10 lakh, it was earlier like this, in excess of 7. So that 7 has been changed to 10. So in excess of 10 lakh, that is 2 lakh, the TCS would be 20%. So how much would be the TCS? 10 lakh into 5% would be 50,000. 2 lakh into 20% is 40,000. So 90,000 would be the TCS rate. So this limit has been changed from 7 to 10. There is again, whenever we are actually remitting the money outside, then also up till 7 lakh, there was no TCS. More than 7 lakh, there was a TCS. Right? And that too, if we are remitting the money for genuine purpose. What was the genuine purpose? For medical treatment or for education. The TCS was a little low. So if you are remitting the money for genuine purpose, that is two purpose, medical treatment or education, or for other purpose, the TCS is high. But up till 7 lakh, there was no TCS earlier, but now it has been increased to 10 lakh. So up till 10 lakh, you can remit the money for any purpose. For any purpose, you can remit. Earlier, it was 7 lakh for any purpose. Now it is 10 lakh. So up till 10 lakh, for any purpose, no TCS, either for genuine purpose, either for other purpose, no TCS. But if it is in excess of 10 lakh, the rate is, earlier it was also 5, here also it is a 20, earlier it was also 20, but only this has changed. So it was 7 lakh earlier, but now they have changed to 10 lakh. Otherwise, rates are same. One important change, actually earlier there was a TCS rate which was very, very low, 0.1%, I believe it was there, that if you are actually remitting the money for education purpose by taking a loan, do you remember that? By taking a loan, if you are remitting the money, so there was a TCS, I believe it was 0.1% earlier, but now they have deleted it. That they said that if you are actually remitting the money for education purpose and it is not your money, you are taking a loan, and let's say assessee's son or daughter is studying abroad, and the assessee has taken a loan from any financial institution, and then they are remitting the money. In that case, earlier there was a very, very negligible rate of TCS. They have actually omitted that. So now there is no TCS. If you are remitting the money for education purpose by taking a loan from a financial institution, then there will be no TCS. So this is the change. And there was one more section, which, if you remember, there were two sections, 194Q and 206C1H. I believe that you don't remember the section number. That's okay. 194Q, it was a TDS section. and this was the TCS section. And what it was that still 194Q is still here, guys. 194Q was, let's say if the buyer is purchasing anything which is more than 50 lakh from the seller, and the buyer turnover of the last year is more than 10 crore. So 194Q is applicable, still it is applicable. But here 206C1H, there used to be a section when the seller is actually selling something which is more than 50 lakh and the seller turnover is more than 10 crore in the last year. So there used to be a TCS also. Now what they have done is they have deleted this section. So this is a good thing that they have deleted this section now. Now it is only 194Q, that TDS section is still there, but this TCS section has been deleted. So you can delete that. If it is there in your book, you can delete that section 206C1H from TCS chapter. So 206C1H is now deleted. Now it is only 194Q, TDS1 is there, but TCS has been deleted. So this is the change. Now the last chapter is return of income. Okay. Let me talk about this first. It's very easy and not that important. Earlier, whenever you apply for PAN number, whenever you have to apply for PAN number, you have to give your Aadhaar number, or even the enrollment ID was accepted. Even the enrollment ID was accepted. Now they have deleted that enrollment ID part, that your Aadhaar enrollment ID is not required. We will not take it. We will take your Aadhaar number only. So now enrollment ID is no longer valid. So it's a very, very theoretical minor change. This is an important change. Updated return. So earlier, updated return was filed. Let's say earlier the updated return was like this. Let's say this is the previous year, any previous year. Let's say 24-25. I'm taking the last year. Previous year 24-25. So earlier the updated return was 24 months from the end of the relevant financial assessment year. So what is the relevant assessment year for this? Is assessment year 25-26. So earlier it was that from the end of relevant assessment year, from the end of 31st March 2026, we were getting 24 months to file the updated return. Now what they have done is they have actually increased this limit to double. Now from the end of relevant assessment year, we will have 48 months. Right? Guys, you can make this with me, for me. Everyone make this with me. So section, this is 139(8)(a). Plus section 140B also, tax on updated return, how much tax you have to pay. There is a little change also now. So 139(8)(a) is saying, now the time limit is 48 months. Earlier it was 24. So just 48 has been changed. 48 months from the end of relevant assessment year. So let's say, example, let's say previous year is 25-26. So what is the relevant assessment year? Assessment year is 26-27. 48 months from the end of. So come to the end of this. End of assessment year is what? 31st March 27. Now, you can file the return from this date 48 months. So tell me, now 48 months means 4 years. So now 48 months from the end of the relevant assessment year. So it would be 31st of March 2031. Understood? So actually earlier it was just 24 months, but now they have increased to 48 months. So this is the change. This is the change in 139(8)(a). Now in 140B, there was an additional tax also which you have to pay. Remember that additional tax? It was some 25% if you submit your updated return within first 12 months. And if you submit it within 12 to 24 months, so it was 50% tax. Remember? So now what they have done is, they are saying that if you furnish your updated return within 12 months, or if you furnish the return after 12 months but within 24 months, or after 24 months but within 36 months, or after 36 months within 48 months. See, after 48 months, so you can't submit. So now the additional tax is, earlier it was if you file your updated return within first 12 months. So earlier it was 25% of tax plus interest, 25%. What is this? Additional tax. 25% of tax plus interest. Tax plus interest. Now also it is 25%. Earlier it was if you submit your return after 12 months, but within 24 months. So earlier it was 50%. Here also it is 50%. Your additional tax would be 50% of tax plus interest. Now, since they have increased this also, so they have increased the rate also. Now it is the change is 60% over here. If you furnish the updated return after 24 months, but within 36 months, 60%, and after 36 to 48, it is 75% of tax plus interest. So if you furnish here 50, if you furnish here 60%, if you furnish here 75%. So earlier it was still here only 25, 50. Now they have increased 60 and 75 also. So this you can make. Understood, guys?
Yes.
Yes, sir.
Done now? Have you written it? You can take the screenshot if you want. So these are the changes by the Finance Act. So this was the last change, right? So if I tell you guys, mostly see in basic concept, there are two changes, rebate and tax rate. Residential status, no change. Salary, hardly any change. Only those theoretical points has been changed. House property, PGBP, only those theoretical changes. Capital gain, only 54 EC, right? Two more bonds are added, which is easy. Deduction, yes, little bit they can ask, but only in optional regime. NPS Vatsalya has been inserted. TDS, yes. In TDS, there is some sections have been changed because of with respect to the threshold limit, and 194T partnership firm section has been inserted. TCS, there is little change in overseas remittance and overseas tour package. 7 lakh limit has been increased to 10 lakh rupees. And also those motor car thing, the list has been increased, right? 2061H has been omitted. Advanced tax, there is no change. Return of income. Enrollment ID changes, okay type. But 138A, updated return, this is a little important from 24 months to 48 months. This is the change. So there are not many amendments by this Finance Act. So it would not be a problem with you. These are the only changes, guys.